Disclaimer, this is an educational case study and quantitative analysis for informational and entertainment purposes only. It does not constitute financial advice, investment recommendations, or an offer to buy or sell any securities. Past performance does not guarantee future results. Please consult a licensed financial advisor before making any investment decisions. All data is sourced from publicly available filings and is subject to fair use for commentary and criticism. Okay, let's dive into this explainer. Today, we're putting Pembina Pipeline under the microscope to see if their massive heavy infrastructure construction actually justifies their financial valuation and that attractive dividend yield. We have a lot of ground to cover today. Here is our roadmap. We're looking at building the Cedar Link, the progress at Mount Bracey, community and environmental impacts, Pembina's 2026 financial surge, a deep dive into the dividend, and finally, the analyst outlook and valuation. All right, starting right off with Section 1. Building the Cedar Link and connecting to the world's first Indigenous majority-owned LNG. We need to measure the sheer scale of the physical asset before we dig into the balance sheet. Look at this rugged British Columbia terrain. This is the staging ground. Logistically, Coastal GasLink is building a 0.4-kilometer lateral pipeline. The goal here is to connect their existing system directly to the proposed Cedar LNG floating facility over in Kitimat. So what is the actual capacity we're talking about? The core metric is delivering 0.4 billion cubic feet of natural gas per day. That is a massive volume, establishing a totally new critical export vein right in North America's energy network. To hit that massive delivery target, they are on a super strict timeline. They're aiming for mechanical completion of the connector by mid-2026, with an anticipated fully in-service date by 2028. You know, building heavy infrastructure is literally a multi-year logistical marathon. Moving right along to Section 2, progress at Mount Bracey. Let's look at the heavy machinery and human effort driving this capital expenditure. This really shows you the heavy CapEx at work. You got the compressor building going up on one side, running right parallel to these massive site cooler installations on the other. And remember, they have to execute all of this through some incredibly harsh winter conditions. But behind all that steel is a massive labor cost. During Season 2 construction, they required a peak of 303 personnel living right on site at the Mount Bracey Lodge. It takes a huge, dedicated workforce to actually pull these blueprints off the page and into reality. Right now, the project is sitting at about 65% overall progress. Looking ahead, the team is gearing up for rigorous system testing, and they're waiting on the arrival of the final turbo compressor package all the way from Italy. That is exactly what they need to hit that mechanical completion target. Okay, Section 3, community and environment. Let's look at how they are safeguarding the land and fostering connection. When you're dealing with a footprint this big, regulatory and operational hurdles are huge. Here, you can see how they're actively protecting the landscape. They're using heavy rock armoring and bentonite blankets at drainage outlets to completely mitigate sediment runoff and erosion. It's absolutely crucial work. Beyond just the dirt and rock, they're actively embedding Indigenous perspectives into their daily operations. For example, they've expanded the lodge's market for local Indigenous artisans and even raised a 10-foot teepee to provide a culturally safe space for smudging. It's really about community stewardship alongside the construction. Which brings us to the numbers. Section 4. Pembina's 2026 financial surge. This is where we bridge the physical infrastructure with the financial reality. Driven by stronger commodity prices and solid ground operations, Pembina actually revised their full-year 2026 adjusted EBITDA guidance upward. They raised the ceiling to an impressive $4.55 billion. That is a very real financial surge. And if we drill down into their Q2 2026 metrics, the reported operating cash flow hit $897 million for just that 3-month period. That breaks down to $1.54 per basic common share. Serious cash generation happening right there. Which leads us directly into Section 5, the dividend deep dive. How are they taking that cash and rewarding shareholders? As of August 2026, Pembina Pipeline yields 4.26%. Now, for income-focused portfolios, catching a yield over 4% from an infrastructure player is definitely notable, but as skeptical analysts, we absolutely need to stress test it. So let's run a safety check. They boast an incredible 28-year streak with 0 dividend decreases, which is fantastic. But here is the catch. Distributing 107% of earnings is undeniably high. You can't ignore that red flag. However, the picture looks a lot safer when you measure it against free cash flow, where the payout ratio drops down to a much more comfortable 81.3%. In heavy infrastructure, free cash flow is often the more reliable metric anyway. All right, final stretch. Section 6, Analyst Outlook and Valuation. Let's weigh what the street thinks about the future. Despite a slight recent dip in share price from its all-time highs, the consensus analyst outlook remains a solid, moderate buy. Wall Street clearly still sees fundamental value here. You can see that long-term confidence reflected in the street's historical target prices too. They've been steadily marching upward, going from 36 Canadian dollars back in November 2022 all the way to a $60 target today. So, let's synthesize this. The balance sheets show a reliable dividend payer, backed by real steel in the ground. But with a payout ratio over 100% of earnings, you really have to ask yourself, does the sheer operational execution and cash generation outweigh the financial premium? The historical performance points one way, but those earnings payout ratios suggest they're walking a tightrope. Which side are you on? Do your own homework. Thanks for tuning in to this explainer.